Welcome back, chumps. I'm the Chump Change Trader, and this is the Small Account Challenge, where I take $2,000 and I try to aim for some naked options. And speaking of naked options, yes, I am shirtless. I am waiting for my laundry to dry, so therefore I decided to take that time to go ahead and produce this video for all of y'all. So without further ado, let's jump right into it. So what do we got with the market so far? So today, the market pretty much chopped sideways. It literally stayed within the ranges of, I'd say like 323 and 323.45 and then 323 like 17, like basically within a few cents of each other, in the Nasdaq, the QQQs. And so it also reflects sort of where we're at with SOXX in the actual semiconductor space. It pretty much just grinded sideways within the day, ranging from all the way in the morning, all the way until pretty much throughout the day. It did drop a little bit at one point, but I think actually no, that was yesterday. Let's see here. No, I did drop a little within the day. So let's look at a 3-day view. It's a little bit cleaner, and then we go to May 8th. So market open pretty much here, went up a little bit, and then just grinded sideways. Pretty much a muted flat level kind of movement. I mean, it wasn't too much. It was 0.3%. So what's the deal? Why is the market just sort of flat for the day when there was kind of a crazy amount of activity just in the last week? Well, Joe Biden actually meets with two Democratic senators to basically or Congress folks. I forget whether they're senators or House of Rep. I believe they're House of Rep. And so actually no, it's Senator Joe Manchin, yeah, and another senator. Long story short, he needs to basically negotiate with them to raise the debt ceiling on the government budget. And if you don't know, if we don't raise the debt ceiling, a lot of negative things could happen as a result of it. And from the things that are technically and not necessarily good things that could happen, good things that could happen from it is basically we just move forward in terms of how we've been operating before. So if you haven't remembered from our past history, we've had government shutdowns before over the debt ceiling only because that's just what that was happening. We didn't have any money to basically pay for any of the basic, fundamental things that run the country. So hopefully that can get sort of solved. But in the meantime, that should raise kind of some volatility, right? Or change some sort of idea of the fear in the market. And so let's take a look at the VIX or the volatility index. And so you can use this to kind of gauge sort of how much fear is in the market. And just from May 4th all the way up to May 8th, we went from $21 all the way down to 17-ish, pretty much flat 17. So the VIX is used to kind of quantify fear, right? But I still feel like that there's a slight disconnect because 17 is a pretty low number. Anything like 21 and above is considered kind of like fearful territory. However, when you look at the CNN Business Fear and Greed Index, we've only dropped about 5 points. It hovered around 65 to 68 kind of levels, and then it only dropped to about 60 in terms of how fearful the market is in that index. Yet the VIX is at around 17, and historically it's been at, from the most fearful points, it's like, anything lower than like 16 to 15 is actually pretty bad. We would be in a bearish zone. So it's kind of bizarre, right? We have a little bit slightly bullish yet flat market. The VIX has gone down, so that means there's no fear, right? The higher the number, the more fear there is. And then the market is also kind of greedy right now. So basically, there is no fear in the market, and everybody's sort of pausing and waiting with their kind of expectations of what's going to happen for tomorrow. So I think Tuesday is a big catalyst for that. If anything doesn't really happen in terms of the negotiations, or there's going to be a delay, that's going to sort of add to the fear, and then we're going to see potentially a spike in the VIX. And so that's what brings us to our positions right now. So in SOXX, we actually have our Iron Condor, at least our original Iron Condor, and I'm just going to move it for today's positions. And this one right here, we see the profit curve over here, and we're printing, and it just will take about 39 days for this to actually actualize. So you can tell if I move the calendar days forward, that blue dotted line is that profit curve, and as I keep moving it forward, it increases the amount of profit that we can actualize in the position itself. Now, that will take some time. And we have here our call vertical that we put in here. And not that it's profiting already more than 50%. Oh, geez, I wish. But we are currently sitting at about a break-even point right now with the position. And so why did I put down a call vertical again? Because I wasn't sure if I was going to lock in yet another 2 sets of wings on Iron Condor. I wasn't really quite sure what the direction of the market was going to be, so I decided to just give myself maximum downside protection, because when I put this position on, if you look at from a week ago, we had dropped all the way down to 403, and so some of the wings on my previous Iron Condors were at like 395, so it would only be $5 away, or maybe this little more than $5 away from that target point. So I did not want to sort of collect that tail risk, as they call it. So I decided to just sort of only open the positions when I feel like that we've already ping-ponged at the highest range or at the lowest range. So with this call vertical, it's basically 1/2 of an Iron Condor. And then as we wait for the big spike in volatility that may bring the market down, I will then go ahead and then put in the put vertical that will ultimately make this position look like this. So I've already created this side of the equation where it pushes the profit margin to infinite on one side, and then once I've created the put vertical on this side, it will create the other leg of the Iron Condor, and we will basically box in the market essentially by 2 ranges. So that's the goal at the very least. So yeah, without further ado, that's sort of my ticker and sort of my window into what I'm going to be doing with the positions. Ultimately, it's wait and see. There's not much about like monitoring this at like a minute to minute, hour to hour kind of deal. Options trading is really about having an intention with the market, paying attention to which direction it may be moving, but realistically speaking, not having to commit to a day-to-day kind of strategy, and having a way out, so to speak, or working with the flexibility of your position. Some positions you set it and then you ride it through. Others you can have the flexibility that you can take it for a scratch, walk away, take it for a small profit, walk away. That's always a better situation, and then live to see another day. We have not used as much buying power as of yet. We've actually used $400 in buying power, which is actually more than what I've used for a full complete Iron Condor. So that would be very interesting to complete this Iron Condor and watch the buying power to actually increase as soon as I complete it, or stay the same. It will probably drop by a small amount, but not too significantly, and then yet double the amount of profit that's being harvested, so to speak. So yeah, if you have any questions, feel free to reach out to me. I'll catch you in the next one.